It's time to get ready for one of the biggest updates of the year if you want to invest in Tesla. This one comes from none other than Dan Ives, the astute Wedbush analyst who has once again divulged the inner workings of Tesla investment. Do things start to level off and go better from here? It goes without saying that software, and specifically FSD, full self-driving, will play a major role in the future. We've been here before, you see. It was observed in 2017 and 2018. When it comes to the state of demand, both domestically and internationally, Musk and I have experienced some of these white-knuckle moments. However, if you consider production scale and our expectations, we're looking at the next year or two. There will be 2.5 million and eventually 3 million. What they're going to witness in terms of delivery and manufacturing, I believe, is merely the beginning of what I'll refer to as the next stage of the Tesla growth story. Wedbush Securities' seasoned technology analyst, Dan Ives, has been watching Tesla for many years. He has a track record of being upbeat about Tesla's future, frequently increasing his price forecasts and presenting bull case scenarios for the shares. He is also well known for his vivid metaphors and analogies, which include referring to Tesla as a golden EV success story, and drawing a comparison between Elon Musk's donation of caviar to purchase a $2 slice of pizza and Tesla's selling of stock to finance a takeover of Twitter. We have some more insightful remarks from Dan Ives himself in today's video. However, what is it that he said this time that has investors talking, and why do we think Tesla bulls should pay attention? Until find out, you must watch until the very end. We think the long-term narrative, the sum of the parts thesis, fully autonomous AI, is still intact, as is the investment plan. But there will undoubtedly be uncertainty in the near future as a result of that conference call. Right now, it's practically an albatross around Tesla's neck. The operational margin was nowhere to be seen. 7.6% of what? It entered. In what way does that happen? Isn't that nearer to other automakers? Yes, indeed, as they have lowered themselves toward other automakers while being in a tremendous position of strength. What matters now is whether things start to level off and become better from here. It goes without saying that software, and specifically FSD, will play a significant role in the future. Dan Ives covers the technology industry as a senior stock analyst and researcher at Wedbush Securities. He is also among the most optimistic analysts on Tesla, the Elon Musk-led electric vehicle manufacturer. Ives has recently voiced his enthusiastic opinions about Tesla's growth prospects, competitive advantages, and valuation in reports and interviews. Dan Ives is not one to make ill-informed remarks, and his most recent assessment of Tesla serves as further evidence that the firm is not your typical automaker. Welcome back to Tesla Tomorrow, everyone. Dan Ives recently underlined that Tesla is deliberately lowering its prices in order to increase its market share and attract a wider range of customers. Recent price cuts by Tesla have made headlines, and the industry is reeling from the company's move. The carmaker dropped the cost of several of its models in a number of nations, but some analysts don't think this was a wise move. Contrary to what these analysts worry, Tesla's choice to lower costs is the appropriate move toward creating sufficient demand for its automobiles, according to investor and Tesla supporter Dan Ives. In addition, he projected that by 2025, Tesla vehicles may be significantly less expensive than they are now. Remarkably, Dan Ives' remarks support his belief that Tesla is the greatest investment of our time and express his continued optimism about the company. Before we continue, though, please make sure you press the like button, subscribe, and enable post notifications if you enjoy this kind of content. This will help you stay updated on all things Tesla. Dan Ives has emphasized a number of key points, calling Tesla's supercharger network a golden EV success story. Tesla's supercharging network, which offers convenient and dependable charging for Tesla owners and encourages more people to convert to electric vehicles, is seen by the company's supporters as a strategic asset and a major differentiator. He added that it is a wise option for Tesla to expand its network of superchargers to include other manufacturers, as this will boost the company's earnings and market share in the EV industry. Dan Ives estimates that when more automakers join the network and pay fees to utilize it, Tesla's supercharger network may generate up to $20 billion in income for the firm annually by 2025. By the end of 2024, he predicted, the network of charging stations would have expanded by a factor of 2.5 in order to meet the increasing demand for EV charging. Dan Ives also anticipates that other well-known brands, such as Hyundai, Honda, and other sizable OEMs, will quickly follow Tesla's lead and utilize the analyses connector from the company, which is quickly becoming the norm in the industry. I've also talked about Tesla's third quarter earnings report, which was made public in October. Ives retains his outperform rating and $1,000 price target for Tesla stock, remaining confident on the company's long-term outlook despite missing analysts' estimates on revenue and earnings per share. He contends that transient challenges that are affecting the whole auto industry, like as supply chain problems, semiconductor shortages, and rising borrowing rates, are what caused Tesla's third quarter earnings to suffer. In addition, Ives notes that even with the latest price reductions, Tesla is still generating impressive growth, deliveries, margins, and cash flow, setting a record for profitability for the sixth straight quarter. It is not unexpected that Dan Ives has been a staunch advocate of Tesla's decision to lower prices. The bears refuse to acknowledge the obvious advantages of this action. Price reductions have demonstrated the potential to have a greater influence on enhancing customer happiness and retention because they allow these consumers to profit financially from owning a Tesla car. Long-term benefits for Tesla include the capacity to grow its market share and sales volume, boost cash flow and profitability, and strengthen customer loyalty and brand image in the global EV market. Like analysts like Cathie Wood, Ives continues to be quite optimistic about Tesla's future since he sees the firm as a big player in the tech and AI arena. He claims that Tesla is a tech company rather than an automaker, which is significant since the business may earn from the monetization of specific particular services. Tesla has greater plans, and these price reductions are just one aspect of how the manufacturer intends to fulfill its goal of becoming the top sustainable energy company in the world. Ives also argues in favor of Musk's performance on the results call, which several analysts felt was overly cautious and negative. He claimed that the CEO of Tesla was maintaining a clear vision and strategy for the company's future, while also being honest and realistic about the difficulties the company will likely experience in the near future. In light of the unstable economic climate and the necessity to concentrate on core goods and markets, he continued, Musk's remarks regarding postponing the launch of the Cybertruck and the Gigafactory in Mexico were sensible choices. According to Dan Ives, Tesla is a major player in the market, especially considering that the company's supercharging network is a competitive advantage and a game changer. Thus, allowing other automakers in will increase value for Tesla and its investors. Ives is an outspoken advocate for Elon Musk, the CEO of Tesla. According to him, Tesla is a pioneer and innovator in the electric vehicle (EV) sector and has enormous growth potential in the years to come in terms of sales, market share, and profitability. He has faith that Tesla will weather the current difficulties and carry on producing excellent outcomes in the long run. But what do you think of his remarks? Tell us in the comments below, and don't hesitate to click on the following video on your screen to learn more about Tesla's recent activities. I'll see you over there.